Hey traders, checking in on the stock market today. So a tug of war out there with the bears winning the morning, the bulls not giving up and setting an hourly higher low, and then the bears showing up into the close. But really it's going to boil down to the FOMC tomorrow, 2 p.m. Eastern, which will dictate whether this bounce gets followed through if the market likes what they have to say, or whether we head back to our recent lows if not. There are going to be a couple other charts that we're keeping an eye on for clues, but really 2 p.m. Eastern is going to be where it's at. So I'm finding the most clarity on the futures charts 4-hour time frames. We rejected from EMA resistance on the bounce. It was a notable bounce that carried through overnight, and it started yesterday, the last 40 minutes into the close. But if this bounce is going to see follow through, we have to see confirmed 4-hour trend changes. We have the low of the drop, the high of the bounce. The bulls were attempting to shape up a 4-hour higher low into the close, and we had a nice equilibrium, and it broke bear. So it was high of the morning, low of the day, lower high, higher low, lower high. Bears control the close. So no 4-hour higher low has been set because of that bear move into the end of the day. And at this point, the retracement size, again, if we want to see a convincing trend change, the bulls ideally want to hold 382 retracement. And we've already retraced about 62%. So we're watching for this 4-hour time frame to tighten up into the FOMC reaction, and then looking for the FOMC reaction to dictate a break. And the NASDAQ is the exact same thing. EMA resistance rejection. The retracement is probably not as significant. 55% retracement. But same deal. If we're going to look at a sigh of relief from the bulls, we will have to confirm 4-hour trend changes. We can already put this in another tally in the column of this time it's different. Look at SPY. So again, the gap down days that have marked our temporary bottoms, big green convincing day, big green convincing day, big green convincing, big green convincing. Don't have that this time. So it's notable. Could this be a bear flag? If we have a bearish reaction to the FOMC, yes, there are a lot of possible bear flags out there. And a lower low is possible. So again, we have to plan for both directions. A lot of traders that I know, myself included, are mostly cash for the FOMC reaction initially, and then we trade the reaction, and there's nothing wrong with that. It happens once every however many months, and if you don't like it, you can skip it. And that's the beauty of choosing when we trade. So NASDAQ, 4-hour trend change needed. Trying to scout a 4-hour higher low, no sign of it at this point. The entire day shifted this morning. So look at SPY. We started, nice bull move, couple dollars to the upside, and then we just fell off straight to a lower low. What happened? What changed to make that happen? And if you were watching Apple, it was very clear. Apple rejected from its high of yesterday by 24 pennies. And that marked the top in the S&P 500. It also aligned with QQQ, rejecting from its high of yesterday by, quick math, 44 cents. So fractions of a percent, 0.1%. We reject from resistance. It gives the bears the opportunity to enter bearish, put your stop above the high of the previous day, and it ends up being a good trade for the bears. So Apple now has a lower high every single day for 10 days in a row. We know the bulls are nowhere to be found as long as that pattern is intact. So simple statement, if the bulls do not break 144.60 tomorrow, the bears keep absolute complete control. Inside bar on the daily, QQQ inside bar on the daily, failing to break high of yesterday. That shifted the entire momentum on the morning and gave the bears a lot of momentum in their favor. Financial sector, so bounce, could this be a bear flag? Yes, it's absolutely possible, depending on the FOMC reaction. Bounce, did it in the wrong direction, but bounce retracement is currently right about 40% or so. Still a possible bear flag. XLV, weak bounce, anything under 133.83 is a daily lower high. The lows, obviously the lows of yesterday are the most important level short term on everybody from here on out. And if those lows break, it will be bears making a statement. IWM, weak bounce on the daily, potential bear flag. Anything under 223.34 is a lower high. Biotech sector, daily inside bar, they stood out as stronger. And a solid day overall, comparatively. Another top fish, though, we rejected from the high of yesterday by 24 cents, a fraction of a percent. And again, bears get a big pullback there. And if you're looking at the inverse leveraged ETF, 3 times leveraged ETF, that rejection from yesterday's high resulted in a very quick 3% move in less than an hour. 4% move, 3.75% move in less than an hour. So just bears protecting levels essentially is what happened on a lot of names today. USMJ sector getting some life into the close, and that's when it became clear, look at that volume in that move, it became clear that we were going to see the amendments favoring the Safe Banking Act added to the NDAA. And now the House is going to vote on that, I believe, tomorrow, and then it has to go to the Senate. But a spark of volume and a daily higher low. So we got our low of 29.10, our higher low of 29.26, and if this move's going to be for real, we must break 31.55, confirming the daily trend change. And I put out the video over the weekend talking about this a lot more in depth, but vote in the short term is important. The dollar. So again, if we're going to see a bearish reaction to the FOMC in the stock market and head back down to our recent lows, then the dollar is going to confirm this cup and handle like pattern. So we have to be cautious of this. If I'm a market bear, I would love this breakout. And if I'm a market bull, I want to see an inability to break resistance and further daily consolidation to eliminate the possibility of a daily bull flag. And it could get ugly if this breaks out over 93.73. So I have to be watching the dollar. That's what I'm going to be watching. As soon as 2 p.m. rolls around, what is SPY doing? What's the dollar doing? The VIX. So the VIX is looking for a daily higher low to try and form. And watching to see if the VIX can now put up an uptrend. Because what would an uptrend show us? It would show us a prolonged downtrend in the broader market, which we haven't seen in a very long time. And I was just preparing for this video and I pulled up this chart and said, well, we are in a weekly uptrend. We did have a higher low and higher high. We're in a daily uptrend. I looked back and said, okay, well, when's the last time that we saw a weekly equilibrium break bull? And the answer was right here. So we had a very clear weekly equilibrium before the COVID collapse, and it broke bull. We set a higher low and exploded. I'm certainly not suggesting that we're about to see markets collapse and things explode, but it is definitely notable to me how that equilibrium broke in the past. So for tomorrow, just to summarize everything, the S&P 500 and the NASDAQ futures 4-hour time frame for clarity, the burden of proof is on the bulls in the short term. If we do not break 4-hour resistance and confirm trend changes, the bears have nothing to worry about and they keep their control. We're watching the dollar daily bull flag attempt. If it breaks bull, that means we're likely headed down and testing our lows. It'll be at the same time. It's not like the dollar is going to give us a big clue. It would be the dollar breaking out in reaction to the FOMC and our markets testing their lows. And that would just, fear would be elevated again if that were to take place. So for the FOMC reaction, just keep in mind that there's often many fake outs. The first reaction that you see in the first 5 to 10 minutes is not always the direction that we end up going. I generally watch the FOMC on the 1-minute time frame. When there's volatile enough reactions, the 1-minute candles can be acted on. And I'll sometimes do the stair-step strategy on the 1-minute time frame. You know, if we dump in the first 5 minutes and it's just a collapse, as soon as the pattern of a lower high every 1-minute candle breaks, I make a bull entry and put my stop under that low. And if we then V-shape and do a complete 180 turnaround, which again happens often on FOMC reactions, then you nail the bottom, or vice versa with the top. So that's just the way that I personally play it, but I would certainly suggest practicing rather than just attempting to trade it because it's very fast-paced and again, lots of fake outs. So moment of truth. We'll see what tomorrow brings. I'm very curious to see if MSOS can break 31.55 key daily resistance. Have a good rest of your day, and we'll see you tomorrow.